Welcome to yet another edition of Commodity Chat from www.akshayaship.com from the House of Lotus Advisory Services. Today is Friday, December 13th, 2013, and this shoot is being done at 8:15 a.m. today. Here I give a wrap-up of the commodities complex, both fundamental and technical as we see it. Last night we had a host of data, both from the US and from the Indian bourses. The Indian inflation hit an all-time high, and the industrial output data was extremely negative. So this has a strong sentiment on both the INR and the equities today, as I will be commenting very shortly. Positive data from the US yesterday came out in terms of retail sales data, which was evident from the prices that came out. Bullions came down, and base metals and crude held ground and rose marginally. Now, as far as the US budget deal seems to be almost on the verge of finalizing between the Democrats and the Republicans. And this could have an impact on the Fed meeting, which is coming up on next week on December 17th and 18th in the US. This will have a positive data, and already market observers are talking about some kind of a stimulus review being done even as early as the meeting next week. One of the reasons why the stimulus was postponed during the last couple of meetings was because of the budget deal in the US Congress, which was not approved. Now that stalemate is likely to end, I feel that some stimulus bargaining talks could start coming in from the course of next week. Now this was evident from the fall in the bullions yesterday, as also because of the initial jobless claims data. As the data from the US over the past 6 weeks seem to be positive, both in terms of growth of the economy and other stimulating factors, bullions are likely to dip down. Unable to break above resistances has been evidenced in the past few weeks. Whenever it hits resistances, both gold and silver, there seems to be sharp selling. But at bottom fishing seems to be coming up, and that is holding gold and silver in a tight range. Gold between $12.10 to $12.50 and silver between $19 to $19.50. Now, as far as Indian macroeconomic data which came out yesterday, inflation hit fresh highs, especially the vegetable prices. Okay, as also the industrial data, a sharp decline of minus 1.8%. Overall, market observers feel that the growth of economy is not able to sustain at highs, and in the next RBI credit policy, which is due to come up on 18th of December next week, market observers are forecasting an increase in repo rate again by about 0.25% to stabilize the economy. Now, as far as Nifty goes, Nifty closed at around the 6250 mark, expected to open about 50 points lower at around the 6200. Likely to test 6180 and 6150 in the days to come, as it continues to be weak. Selling at highs has been coming. This growth has come up from 6200 to 6400, and from 6400 since the BJP swept the assembly elections last Sunday. Markets have been slowly drifting down with very less volume from 6400 down to around 6200, which is likely to open this morning. 6180, 6150 are strong supports now. Once 6150 gets taken out, we could even see markets coming down to 6050, 6030, 5980. On the flip side, next upside would be seen only on a break and close about 5300. INR has been trading yesterday. It appreciated sharply and closed at around the 6180 mark. Today we expect weakening in the INR on account of poor data that came out on the Indian macroeconomic front, expected to open at around the 62 to 62.10 mark. I would see the support at around the 62.50 mark and resistance at 61.50. So we would expect the range to be 61.30 to 62.80 in the next few days till the RBI credit policy is announced. Now I come to the individual scripts. First, gold. Gold in the international market is trading at around the $1227. For the past few days, it's drifted gradually lower from the highs of $1265 to $1268 seen a few days back. Yesterday, it broke the crucial levels of $1250, $1240 to hit low of $1224. Now trading at around $1227. Supports would be seen at $1220, $1215 and $1210, and resistances at $1235 and $1244 respectively. Overall, it seems to be a sell on rises strategy for now. On the MCX exchange closed at around the 29,500 mark. Supports would be seen at 29,400, 29,300, 29,250 and resistance at 29,700. Sell-on rises seem to be strategy. Watch out for INR moves for the way in which the MCX bullions shape up. Silver is now trading at 19.30 mark. Support is now seen at 19.20 to 19.10. Positional support, of course, at $19. Resistance at $19.50. On the MCX closed at around the 44,400 mark. Expected to test support at 44,000. Resistance is now at 44,800 and 45,000. Today's weakening in the INR could hold up bullions in initial levels. Could be even a strategy for sell-on rises unless the INR continues to weaken further. Now, positionally, support is seen in MCX silver at 43,700. If that gets broken on a closing basis, even 43,000 could be tested and resistance about 45,000. Crude is holding ground at around in dollar terms at 97.50, closed at around the 6079 mark. 6100 is a strong resistance level. A close above 6100 could propel it up to 6150, 6200. Strong support is now seen at the 6010 mark. On a positional basis, expected to trade with supports at 5970 and resistance at 6130 mark. So long as either side gets taken out, further breakouts could happen on either side. As we have forecast for the past 10 days, natural gas has sharply gone up and tested highs of 274 yesterday, closed at around the 270 mark. Now, support is seen at 264 and resistance at 275. If that gets taken out, 278 to 280 could be tested in the days to come. Fundamental news in terms of weather conditions, the US are obviously supporting natural gas, as also the drop down in inventories over the past couple of weeks. Profit booking cannot be ruled out, as we have seen sharp rises from the 250 to 275 levels over the past few days, and consolidation and sideways moves could take place during the course of the day. Weakening in INR could hold it up higher, as also in crude oil. Copper has been steadily going up from the 445 mark to around the 460 mark, closed at around the 460 mark. If it sustains above 460, next resistance at 464 could be tested. Current support is now seen at 456 and 452. On the LME, it hits a fresh high of $72.49 yesterday. So long as it sustains above the $7,200 mark, it remains positive. Weakening in INR could hold it up further. Buy on dips looks to be the strategy as of now. Watch out for data during the course of the day today. Nickel is holding above the 870. It looks positive to test 875, 878 and 880, and support is now seen at the 858 mark. Lead is positive, expected to test resistances of 133, 134. Support is now seen at 130.50. Zinc remains positive, expected to test 123 with current support at 120.50. Aluminium is also trading around the 109.5 to 110 mark. Overall positive on a close above 110 up to 111, 111.5, and support is now at $109 mark. Overall, today being a Friday, in those commodities, especially copper and natural gas, where we have seen sharp spikes over the past few days, profit booking is likely to set in. Watch out for intraday calls and trading commentaries provided in our Facebook at www.facebook.com/Lotus Advisory Services and in our website at www.akshayaship.com. Our calls and trading strategies would be posted there during the course of the day. Have a safe trade, have a safe and a profitable trading day. Thank you.